Bismillahirrahmanirrahim. Selamat datang ke Bank Negara Malaysia. Pada sidang akhbar ini, pertumbuhan ekonomi negara serta perkembangan moneteri dan kewangan pada suku ketiga tahun 2014 akan diumumkan. Ekonomi negara mencatatkan pertumbuhan kukuh pada suku ketiga iaitu sebanyak 5.6% berbanding dengan 6.5% pada suku kedua tahun 2014. Ekonomi negara terus disokong oleh permintaan dalam negeri yang kukuh. The global economy continued to expand at a moderate pace in the third quarter of 2014, with uneven performance across economies. While the US and UK economy continued to show broader signs of improvement, growth in the euro area remained subdued amid persistent structural constraints and weak business and consumer sentiments. In China, growth expanded by 7.3% amid policy measures to address domestic imbalances in the real estate and shadow banking sectors. In the Asian region, economic activity continued to expand, although the pace of growth was more moderate in several economies. The Malaysian economy registered a growth of 5.6% in the third quarter of 2014, supported by private sector demand and continued growth in net exports of goods and services. The seasonally adjusted quarter-on-quarter growth indicated that the Malaysian economy grew by 0.9%. The growth momentum of the economy, therefore, remains positive. Private sector domestic demand remained the key driver of growth, expanding by 6.7% in the third quarter. Growth was further reinforced by the external sector performance. Private consumption grew by 6.7%, while private investment registered a growth of 6.8% in the third quarter. Public sector spending declined during the quarter as the contraction in public investment more than offset the increase in public consumption. The growth in public consumption reflected higher government spending on supplies and services. Public investment declined due to continued contraction in spending on fixed assets by both the federal government and public enterprises. After the strong performance in the second quarter, net exports remained positive and contributed to the overall growth. Private consumption, as I mentioned, registered a growth of 6.7% during the quarter, and the growth of private consumption was supported by stable employment conditions and continued wage growth. As unemployment is now about less than 3%. Private investment grew at a slower pace of 6.8%, and this is attributed to a decline in spending on machinery and equipment, especially due to the base effect in the transportation segment, as the total number of aircrafts delivered in the third quarter was significantly lowered compared to the corresponding period in 2013. And this number is affected by the one-off large items that are imported also as well as invested. 5 aircrafts compared to 7 aircrafts in the third quarter of 2013. Gross exports experienced a broad-based moderation in the third quarter, registering a growth of 1.5%, and this was attributed to a higher base from the third quarter of the previous year. Gross import growth also moderated to 2.6% due to the decline in imports across most categories. Capital and consumption imports declined, again reflecting the high base effect from the previous year. Meanwhile, intermediate imports expanded at a stronger pace amid a continued expansion in the manufacturing activity. The current account position remained in surplus at 7.6 billion ringgit, or 2.9% of GNI during the quarter, amid a lower goods surplus and a higher deficit in the services and income accounts. On the supply side, positive growth was experienced across all economic sectors. The services sector registered a growth of 6.1%, underpinned mainly by continued growth in the wholesale and retail trade, communications, and real estate and business services sector. After a strong growth performance in the second quarter, the manufacturing sector expanded at a more moderate pace of 5.3% due to slower growth in the domestic-oriented clusters, particularly in the consumer-related industry. The construction sector grew at a sustained pace of 9.6% during the quarter, and this performance was supported by both the residential and non-residential subsectors. Now, the agricultural sector recorded a slow growth of 4%, largely due to lower palm oil and rubber production. The mining sector grew at a more moderate pace of 1.4%, following lower production of natural gas and condensates. Turning now to inflation, the headline inflation moderated to 3% during the third quarter, and the decline in headline inflation during the quarter was mainly attributable to the lower inflation in the transport category, reflecting the lapse of the impact of price adjustment for RON 95 petrol and diesel that was made in September 2013. In the recent Monetary Policy Committee meeting, the OPR was maintained at 3.25%, and it was assessed that the downside risk to growth had increased, but the overall growth is, however, projected to continue to remain on a steady growth path. While inflation had moderated in the recent quarter, going forward, it is expected to trend above its long-term average, and largely due to domestic cost factors. And these developments, however, are expected to be temporary. The current stance of monetary policy remains accommodative and assessed to be appropriate given the developments in the monetary and financial conditions. Moving forward, the Monetary Policy Committee will continue to carefully assess the balance of risks surrounding the outlook for inflation and domestic growth. The MPC will also remain vigilant to the risk of destabilizing financial imbalances. This, too, is to ensure that monetary policy stance is consistent with the sustainability of the growth prospects of the Malaysian economy. The ringgit depreciated during the US dollar by 1.9% during the third quarter, and up to 28th August, the ringgit was supported by positive data on the domestic economy and including on the strong second quarter economic growth. Towards the end of the quarter, however, the ringgit, together with other regional currencies, faced strong pressures as investors shifted their position towards the U.S. financial assets following expectations of an earlier than expected policy rate increase by the Federal Reserve Bank. Against other major and regional currencies, the ringgit performance during the quarter ranged from an appreciation of 5.9% and a depreciation of 2.8%. Going forward, the regional currency and financial markets will continue to be influenced by external developments, including monetary policy adjustments in the advanced economies. Net financing through the banking system and the private debt securities market moderated slightly to 8.9% as at end September. following more moderate growth in outstanding banking system loans to the households following increased repayments and to the businesses' redemptions. Nonetheless, loans disbursed, particularly to businesses, and funds raised in the capital market increased during the quarter, providing continued support for economic activity. Of this, loans disbursed by the banking system to SMEs was also higher at 58.9 billion ringgit and compared with 57 billion in the second quarter. Domestic financial stability was also preserved throughout the third quarter despite continued challenges brought about by movement in short-term portfolio flows and financial intermediation during this period, both through the banking system and the financial markets, remained supportive of domestic economic activity. Overall, stability has also been well supported by sound and well-capitalized financial institutions. And this is demonstrated by the strong capital buffers, which are in excess of the regulatory minimum, and risk-taking activities by financial institutions were also broadly unchanged and continued sound risk management practices. Banks and insurers are expected to remain resilient against the potential adverse financial market and macroeconomic conditions as affirmed by stress tests conducted by the bank. The annual growth in household borrowings from the banking sector and non-bank financial institutions increased at the pace of 10.4%. Personal financing continued to grow at a more moderate pace of 4.2%, and as a series of macroprudential measures continue to take effect. The quality of new household debt has also improved, as indicated by sustained prudence in debt services ratio reported for new loans granted. Close to half of the borrowers who obtained new financing in the second half of 2013 have more prudent debt service ratio of 40% and below. The overall asset quality of financial institutions remains sound, with the loan impairment sustained at 1.2% of household borrowings from the banking sector. This is referring to the non-performing loans, which is now 1.2% of total household borrowings. Credit risk exposures to businesses remain largely unchanged, supported by financial and balance sheet strength of businesses. Domestic borrowing, that is loans, private debt securities, and sukuk by the business sector grew by 7.6% on an annual basis. And this is an improvement from the second quarter, which was 6.8%. And despite the decline in aggregate interest coverage ratio, the debt servicing capacity of businesses remain intact. Following losses from a bank credit exposure to businesses are also minimized by, potential losses from bank credit exposures to businesses are also minimized by the strong financial buffers accumulated by the businesses. As at end second quarter 2014, current assets of businesses stood at 1.7 times of current liabilities. In the property market, the series of measures introduced since 2010 to rein in excesses in the domestic housing market have begun to yield outcomes. The annual growth of the Malaysian house price index has been stable for the recent 2 quarters at 9.6%, markedly lower than the double-digit growth observed in the prior 2 years. The preliminary MHPI data also indicated that the annual growth of house prices moderated further to 6.6% in the second quarter of 2014. The slower growth in house prices is observed in key states such as Kuala Lumpur, Selangor, Johor, and Penang. Bank financing of speculative activities are also have been well contained. The number of borrowers with 3 or more outstanding loans continue to account only for about 3% of total housing loans borrowers since the imposition of the loan-to-value ratio in 2010. Going forward, while the overall global growth momentum is expected to improve at a moderate pace, the recent growth forecast has been revised downwards. That is, yes, we are having moderate growth, but the overall growth is projected to be lower than earlier forecasts. Growth across the advanced economies is expected to remain uneven, and in Asia, economic activity will continue to be supported by the expansion in domestic demand and exports. For Malaysia, while domestic demand has continued to support growth, exports have shown signs of moderation. Going forward, domestic demand will remain the key driver of growth, and while private consumption may moderate, investment activity will be supported by the continued flow of ongoing and new projects by both the private and public sectors. Based on these trends, the Malaysian economy is expected to remain on a steady growth path. Thank you, and that concludes the presentation. We are pleased now